Hello traders and welcome to another video review. Today is Wednesday, September 10th, 2025. Let's take a look what do we have in the Forex economic calendar for today. Overnight data from China missed the expectations in form of the CPI monthly and quarterly data. CPI down from 0.4 to 0%, and on the quarterly measure we are down from 0% to minus 0.4%. This means that the PPI is again higher from minus 3.6% to minus 2.9%. London session is very quiet today, so we are skipping straight on to the US session. Course PPI and PPI data scheduled for at least at 2:30. The market participants expect the producer price index to deteriorate from 0.9% to 0.3%. Crude oil inventories are scheduled for release at 4:30. Together with the Cushing crude oil inventory. CPI from Russia Federation is scheduled for release at 4:53, and then we got Atlanta Fed GDP now scheduled for release at 7 o'clock, and 10-year note auction scheduled for release at 7 o'clock. Not very busy day, only one very important data release during the US session. So without any further ado, let's start with the technical part of this review, and we start obviously with euro dollar. Euro-dollar 4-hour time frame chart is showing us what? Deterioration down towards the lower channel line. Let me just make this channel line a little bit longer. There you go, and we can see that after establishing the local swing high at 1.1781, we got very strong movement to the downside, some sort of the pullback, because we hit the extremely overbought market conditions on a 4-hour time frame chart. So this pullback is much needed. We broke below the level of 50 on the RSI, which is why we are now penetrating the levels of 44 as we approach the 100 periods moving average located at 1.1671 and the lower channel line. So the market, despite the recent movement to the upside, keeps moving up and down around the 100 periods moving average. So there is no impulsive wave progression to any direction on the euro dollar. How is the cable doing? Well, the technical resistance at 1.3593 was too strong for the bulls, and as you can see, they were rejected from this level. After testing it, we are back down below the trend line, down below the level. There you go, down below the level of 1.3548, approaching the 100 periods moving average at 1.3480. So momentum went down from the level of 68 and 50, 1.5 point away from the extremely overbought conditions, but the momentum is still positive. However, it's not strong whatsoever, 54 points only. So I guess that the situation here looks like a pullback to the downside after the failed attempt to rally above the crucial short-term technical resistance level. So let me just make it stronger. There you go. So you can see we are back below the trend line, very close to the technical line, like a simple moving average, and it looks like we are back inside of the range. So there is first breakout attempt failed on cable. US dollar versus the Japanese yen. Not much is happening here. It behaves perfectly as we planned. We are keep moving inside this sideways market from extremely overbought conditions and a supply zone down to the extremely oversold conditions to the demand zone, back towards the 100 periods moving average 147.65. Not much changed here whatsoever. The market keeps develop like this so right now there is nothing else left to do but to wait for the market to do some kind of a breakout. Gold market is very interesting these days, because we got the bearish divergence here, as we mentioned yesterday, between the price and the momentum indicator, as we made the local local swing high and the general swing high technical resistance located at 3,674. Yesterday we pulled back a little, back down towards 3,619. Today the uptrend might be resumed. However, this movement to the downside is not enough for the bearish divergence to be resolved in this chart. I guess that we need to break below the level of 60 towards the territory between 60 and 50. If we hit off obviously the neutral line on the RSI, the price will drop possibly to even towards 3,577. Then this divergence is resolved and the market is ready to move higher. Let's take a look at the Bitcoin. The Bitcoin attempted to rally again above this short-term technical level swing high at 113,475, but it failed for the first time, second time, third time. Back towards the 100 POs moving average, as you can see here, and now it's trading very, very closely to this level as the momentum stays neutral, well, briefly positive, barely positive, briefly positive. So breakout above this swing high does open the road towards 117-ish level. However, this is still like a $5,000 dollar range, and it doesn't actually look like the bulls are ready to do this yet again. So right now, this movement to the upside, even with this high here made on the September 5th, is still a kind of a typical correction range, like this one or like this one, but bigger in time, obviously, as the market found its base tested 3 times already, 107,386, which is why the bulls are trying, after they found the base, the bulls are trying to rally higher. They failed 3 times. Not much to say here. There isn't much to say here, as every attempted rally brings some sort of the let's say conclusions for the market participants. It looks like they are too weak to rally above this level here. I just changed the lines on the chart just to show you guys that it's getting very tough here around 114,000, 13,000 basically to break it, right? So one day sooner or later this level might not be enough for the bears, and they will push it way harder than they are doing this right now. Ethereum, very particular situation, almost no volatility after this big rejection. Look at these candles, big rejection. Look at another rally, big rejection, 4,500 level. This area here is not for bulls. They've been rejected so many times. Dips are still being bought inside of the demand zone. Nevertheless, that decrease in the volatility, basically we go to the half of this range and then we go down yet again. Long upper shadow. Long upper shadow means that this market is under depression. Even if we kind of trade inside of this range market, right? Range bounded market. Demand supply, right? So it looks like hovering around the level of 50 with occasional breaks a little bit higher, 56, 40, 44, doesn't actually make this market trending. So I guess there is a partial distribution going on here on this market. The first one was on the highs, then there was a pullback, then there is a second distribution, and we might see markdown soon on the Ethereum if this green lines area is violated. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.